Thursday morning. That can only mean one thing. Welcome to another edition of Las Vegas Money Resource. I am your host, Travis Scribner, managing partner of Westpac Wealth Partners. In studio today with Mr. Todd Archambault. Am I saying that right?
You are, yeah.
Man, that's a name. I like it. Mr. Todd Archambault from eCreditAdvisor. Todd, I always like to kind of get a little background on your business, what it is that you do before we get started. So tell me a little bit about yourself and your company.
Okay, so eCreditAdvisor, we started it in 2004. We're a credit repair company. We work with a lot of the nation's top home builders, top mortgage companies, and basically what we do is we help credit challenged consumers get into the housing market.
Awesome.
Get credit qualified.
So just tell me a little bit more about, so exclusively with the new, with the construction companies, the home companies, or?
Yeah, so like KB Home, Lennar, Pulte, have all been customers of ours in the past or customers today. Ryan Homes. So we work with 8 of the top 10 builders in the country.
Wow, and it's national, or not just here in Vegas?
Correct, national.
Wow,
yep.
That's awesome. So someone comes in, they want to buy a house, credit challenged, I believe is the term that you just used.
Yeah.
I like that. And then you kind of square them away.
Exactly right, yep.
Kind of walk me through that process a little bit.
So up front, we'll do a free evaluation for them. We'll break down exactly their credit profile. Our program's twofold. It's one about helping them historically to go back over the items that we're reporting negatively. We hold the bureaus and creditors accountable for not only what they're reporting, but how they're reporting that information on the consumer's behalf. And so there's 7 laws and 32 articles that we leverage on the consumer's behalf. And then the second part is about putting them in a position so that when they leave our program, they can continue to build their credit score in a positive manner.
Wow. Okay. And so someone comes in, goes to their mortgage broker, whoever it may be, and then to the home builder. Do they directly put them in touch with you? So you work directly with the home builders, and then they say, hey, you're not going to qualify for this.
Yeah,
we need to talk to our man, Todd Archambault. He's going to square you away.
Exactly right. So a lot of our clients are typically going for an FHA loan, which is a government loan. And so the qualifying credit score is typically a 620 to a 640, depending on overlays. And so a lot of our customers are short of the 620 to 640. And so that's our goal, is to get them to that point.
And
get them back to the home builder.
The American dream of home ownership.
Yeah, exactly.
How long does the process usually take?
Yeah, so last year our average hold time of a customer was 112 days, and our average score increase during the 112 days was 75 points.
Wow.
Yeah.
That's a decent sized jump.
Actually, yeah, it's huge.
Yeah.
But the secret to our program is really twofold. One, it's about what we do on the consumer's behalf. Secondly, a lot of the coaching that we do for the customer. Our customers have to be engaged in the process, and that's really the difference maker, is giving them the information to help themselves through the process.
I think that's key in all aspects of life. You kind of said, like, help themselves. I think with everything that's kind of gone on in this country lately, as far as the election and all these different things, I think everyone is just waiting for someone to come in and save them.
Yeah. Right?
Like, everybody wants to be saved. I think at the end of the day, though, you've got to kind of wake up, take ownership of your own life, be coachable, and find, a good company to pair with, like yourselves, and take accountability for yourself. Like, no one's going to save you but yourself. So I think that's awesome that they need to be that engaged in the process. Yeah, to kind of make things work.
So each customer of ours gets a dedicated credit coach that works with them from the start to finish. And so they're working with one person on our team through the entire process. And so it becomes a fairly intimate relationship. And yeah, again, it's about holding that customer accountable to the process.
So you got to take me back on this. So how'd you get started doing this?
Yeah, so I did an internship in college. I went to Marquette on a golf scholarship.
Oh, nice.
And
still play much?
Oh, not much.
Okay.
Once a week, maybe.
You're a successful business owner then, yeah.
Maybe. The game's not quite as good as it once was, that's for sure. But so I did an internship in college, and the guy that I did an internship with ended up starting or having the idea for eCreditAdvisor back in 2004, and I partnered with him. Very modest beginnings. We put in $5,000 each, and today we have 17 employees, and
I always love those stories of, like, it's like my buddy from college, or like somebody that I know. I've got a few friends who did, kind of the same thing. And it's just cool to see the progression of these companies. I think that's coming back to what I was saying. That's truly like that American dream of, we're in this dorm room or we're in this garage and we have this like idea that we think may work. Yeah. And you're young enough and crazy enough to actually give it a shot. And the next thing you know, it works.
Yeah. No, I didn't take a check for 18 months when we started this. So
wow.
I was working for another company as a consultant, company called Advent Software out of San Francisco. And so that was helping pay my bills. But Yeah.
This was the long term.
It was a long term, yeah.
How'd you end up out here in Vegas?
Yeah, so I lived after I graduated college, moved to San Francisco, and then my wife and I at the time decided to relocate to Vegas. Her parents bought property out by Lake Las Vegas, and we ended up taking over that property and building a home on it.
Oh, nice. Still out there?
Yep.
That's far.
It is far. It is far. It is far.
I worked for a guy in college who had a house out there. My running joke was, man, if I lived out here, I'd need a helicopter to like kind of charter into the city. But it is gorgeous out there.
Once you get out there, it's beautiful.
Yeah. So your buddy had the idea.
Yep.
For the company. Where did the idea come from?
Yep. So he used to purchase homes on the courthouse steps, and he used to actually buy investment homes. And then really he was marketing towards credit challenged consumers at that time, and he was helping these people that he was getting them in as rental clients, and he was helping them to purchase his home in a lease option agreement. And so he kind of had that idea, and then he went to work for a company in L.A. That did similar to what we did. And so his interest in me was kind of the technology part. And so I built our platform is it's all about transparency, accountability. And so everything that we do on the consumer's behalf is published. I don't know if you know much about our space, but it's, there's a lot of bad actors, if you will.
I was going to circle back to that actually. And that was going to be kind of one of my questions was like, it's a really, really murky space to say the least. Is kind
that's
of
well put. Yeah,
it's kind of like the nicest thing I can say on the air about it.
Yeah,
and there's a lot of people that seem to be extremely fly by night. There's a lot of I think you see a lot of multi-level marketing companies. There's just a lot of weird stuff that goes on in the credit repair space. Just a lot of weird stuff.
So unfortunately, there's just not a lot of good information out there. And typically, consumers that find themselves in a credit challenge position, they're there for the first time, so they don't really. There's nowhere to turn. And so these other companies are able to take advantage of them just because there's not a lot of good information out there. Right? There's a lot of noise. So how do you get past the noise? Yeah, so we have an A+ rating with the BBB, but really back in the day, it was selling ourselves and our reputation and what we built. And once you start partnering with the Lennars, the Pulte's, and KB's of the world, then it helps forward your reputation. These home builders are extremely diligent in their review process. And so, but how we've built and how we've gained the following that we have is really about treating the customer first, right? So everything that we do is with that in mind. Our longest program is 5 months. So if it takes us longer than 5 months to fix your credit, it's on us. It's not on you. And so the motivation and the accountability is also there on us as well.
And I think that's a pretty refreshing way to look at it. With my limited exposure to those types of companies, from what I can gather, is they want to kind of keep you in the program as long as they can,
exactly right,
because they're going to be billing you
exactly right,
on a monthly basis. So the fact that your longest is 5 months speaks volumes to
the motivation's there, right, on us and also on the client. And like you said earlier with regards to the accountability of the client, there isn't really a secret sauce here. There are some certain things that, hey, you've put yourself in this position. Here's some things that you're going to have to address in the process as well.
That's awesome. We're going to cut to commercial. We'll be back with Todd Archambault from eCreditAdvisor after these words. Welcome back to Las Vegas Money Resource. Your host, Travis Scribner, with Mr. Todd Archambault from eCreditAdvisor. We went to commercial speaking a little bit about the background of your industry being a little murky, being a little shady. You guys seem to be the exact opposite end of the spectrum. So it's nice to find the yin to the yang of these other companies. You mentioned the contracts you have with some of the larger home builders. Mm-hmm. Walk me through that. Like, how did that happen? What was the vetting process? How did you end up partnering with these large-scale national companies?
Yep.
That had to be a game changer for you guys and the business.
It was. I mean, really, it came in 2007, 2008 in the crash. Prior to that, we didn't have a whole lot of action with the major builders. But when the market really, really tightened, banking regulations went up. It really truncated. It shrunk the viable home buyers, and so they looked to companies like us to help increase their market. And Lennar was our first major builder, and it was in 2007. And we were the 5th credit repair company in 4 years that they looked at. And unfortunately, the bar was set so low by some of the other companies that it wasn't difficult for us to shine in a fairly short period of time. some of the things that we've built from a technology standpoint, just there's complete transparency. Every phone conversation, every document we send and receive, the status of everything that we've done on the customer's behalf is completely transparent, not only to our customer, but it's also transparent to our partners. So the mortgage company or the home builder, they can see exactly what we're doing on the consumer's behalf, and it allows them a level of comfort to then refer their customer to us, and they know exactly what's being done.
And then from there, I'm guessing just kind of a snowball effect of you leveraging the relationship with Lennar into the next home builder and the next.
Yeah, what we didn't expect is Lennar actually referred us into Pulte, one of the VPs there. It's a fairly small world at the top, and so one of the VPs there had referred us in. And then KB came to us about in 2012. Their COO, Mark, reached out to me, Crivelli, and he'd done some research on some of these other builders and saw our name on their sites, and they're like, if you're doing business with all these other builders, why aren't we doing business with you? And so that's what led to that.
And that kind of led to that. So there's two left that you haven't gotten yet.
Yeah, D.R. Horton has a program that is free to the consumer. It's not nearly as robust, but we have not been able to knock that door down.
You'll get there.
Yeah, and Richmond American.
Okay, so those are the last two holdouts.
Yeah.
Okay, I'm sure we'll get them on board as well. Owning a business, challenging, especially kind of the way you guys started it.
Yeah.
Always kind of something you aspired to do, to own your own, or was it just kind of?
It was a goal of mine. I didn't know if it was going to become a reality, but it was something that I really wanted to do. But yeah, having 12 years in it, it's amazing how much you learn and how much you grow, and as your business grows, how you grow with it. As your business grows, because you're the owner of the company, you find yourself, in the beginning, putting yourself in a number of different roles that maybe you're not best from, right? And as you grow with that business, you learn to go, hey, I need to, just because I own the company doesn't mean I have to be in all aspects of it, and kind of stay in your lane, if you will. Yeah,
that's a great point. I think a lot of business owners have problems with that. You kind of have this business, it's your baby, and then as you begin to grow, it feels different. You're not wearing all the hats anymore. And I think that's where a lot of guys or gals struggle, is to kind of let go of the reins a little bit and put people who are better suited in different situations into those positions. And the relinquishing of control, I think for some people is extremely difficult. But it sounds like you had a pretty...
trial and error. As you go through the process, and you don't always you don't succeed the first time, but as you go through it and as you look, and I've a good team around me. I have some good balance in terms of executive positions. My CFO, he's known me since I was 13 years old, and so to have people like that have known you from way back and can kind of call you out and hold you accountable and say, hey, this is not the right thing for the business, and So
I think that's another big thing. I think sometimes people insulate themselves with a few too many yes men.
Yes.
And the idea is that all of a sudden every idea that they say is being reinforced as being the greatest idea since sliced bread. So having someone to challenge you and hold you accountable throughout the business as you grow, I think is imperative. You mentioned you started the business with a partner. Are the two of you still together?
We're not. We separated in 2013.
Okay.
He just had some other interests. He's big into art. He's got an art gallery in LA, and so he was doing some other things.
That's kind of his passion project.
Yeah, exactly right.
Yeah, you see that. I think sometimes for some business owners, the owning that business and the growth of that business is the end. Like, that's the end game.
Yeah.
And then for others, it's like, if there's something else I'm passionate about doing, I'd like to segue into doing that. So it's kind of cool that the divergent paths between the two of you kind of led you both where you wanted to be.
Yeah, and he was a little bit older, and he was a little bit further along in his career, and so yeah, you're exactly right. It was just a transition.
So this wasn't. I mean, it was his concept originally.
It was his concept,
but this was something that you became passionate about doing, because you can hear it when you speak about it that you care about.
Yeah. I mean, listen, we move the needle considering what we do for people's lives. Most people that are credit challenged, when you don't have access to the marketplace with regards to financials, you don't have access to credit cards or what have you, most people find themselves in this position for the very first time, and they don't really know where to turn. And they've probably been good consumers for 10, 12, 15 years, and something has happened, a bankruptcy, a divorce, or some type of medical issue for the first time, and they truly don't know where to turn. And unfortunately, again, because there's not a lot of good information out there, if you're below a 580 credit score, you don't really have access to the marketplace. And so a lot of these people, they don't know where to go. And so, if you think about their buying experience, they go and, you can look at a credit report and see all the inquiries where they're trying to get financing and they're getting denied. And so most places that deny them, they just say, sorry, you don't qualify, and they send you down the road. There's really no help. There's not a handout to say, hey, listen, this company's actually got a program that can help people in your same situation to,
Yeah, when you're seeing it more and more across all aspects of life now too, from even applying for jobs now. A lot of employers are pulling credit, different things like that. So it's this, this cycle of how are you going to get back on your feet when there's nothing else you can do. And, I think we all know good people that have had some bad things happen to them. And so the fact that they're set back that much based on their credit score is something that a lot of people have no clue how it works. They don't understand it, so they don't even know where to begin. So it's a huge roadblock, I think, for a lot of people getting back into the workforce.
Yeah, no question. They're using the credit report as a measure of one's character, and employers do it. We do it when we hire, What's unfortunate is the amount of negative or wrong information that's on a credit report, but still how much we rely on the credit report because it is a quick and easy way to kind of dive in to see kind of where someone is at.
Yeah. So you find a qualified candidate. They've got some things on their credit report. Are you guys going to help them and then hire them?
So yeah, we all of our employees are allowed to go through our program for free, and a lot of them have taken advantage of it.
You mentioned a lot of misinformation on there on people's reports. What are some of the things you may see on there that could be incorrect?
Yeah, so one of the biggest items today is what's called date of last activity, and it's tied to the statute of limitations, which determines how long an item remains on one's credit profile. And so what you have in today's marketplace is you have collection company A that sells the debt to collection company B, and collection company B is now going to re-age that item and bring that item current on someone's credit report. And so what that does is two things. One is it keeps that item reporting for another 7 years, and secondly, it increases the weighting of that negative item on a credit profile. So that item might be 5 years old, and it might only should be counting 10 or 15 points towards their credit score, and instead they're showing it as a brand new collection item, and it's counting 50 or 60 points.
Wow.
Yeah.
Go ahead.
Yeah, go ahead.
So we'll cut to commercial, come back, keep that thought, tip of your tongue, don't lose it. We'll be back with Mr. Todd Archambault from the eCreditAdvisor after these messages. Welcome back to Las Vegas Money Resource. Your host, Travis Scribner, managing partner of Westpac Wealth Partners. I'm with Mr. Todd Archambault from eCreditAdvisors. We cut to commercial. You had something there on the tip of your tongue that I had to cut you off so our sponsors could make their money.
Sure. So the way the process is set today is you have the creditors that pay the bureaus a fee to report the information on the consumer's behalf. And so you kind of have the mouse watching the cheese out. There's no secondary source that scrubs any of the information on the consumer's behalf to hold the creditors accountable for what they're reporting. Simply what the creditors push to the bureaus report. And so it's truly up to the consumer themselves to police what's on their credit report. And unfortunately, most consumers, they don't pay attention to their credit report, although with the Credit Karmas and what have you, we're getting a little bit more aware these days. But most consumers find out what's on their report when they're purchasing a vehicle or a home, and they're like, wow, I don't qualify. I didn't know this item belonged.
Yeah. So that's really interesting because there's no one policing it. So it's just...
That's why companies like us exist. Exactly, to hold them accountable.
So the creditor just says, hey, Todd owes us X amount of dollars, and it's on your credit report, and unless Todd takes a look, there's nothing he's really going to know about it.
Exactly right.
Wow.
Exactly right.
Yeah, it's very confusing, I think, for people on all sides of things, whether it's the consumer, whether it's, most people just have no basic understanding of how this stuff works and getting it on. So talk to me about the length of time something can be on there.
Yeah, so again, back to date of last activity, that's really what controls how long an item can remain on one's credit profile. And date of last activity is tied to consumer action. It's the date the consumer last made payment or charge in the account. And so most items can remain on your credit report for 7 years from the date of last activity. Bankruptcies can report for up to 10 years. They affect your credit for 7, but they can report for 10 years. And then the judgment, if filed and refiled, can stay on there indefinitely. So you can refile a judgment every 6 years.
Wow. So walk me through, someone calls you, kind of take me through the process of them working with you.
Yep. So typically they're referred into us through a mortgage partner or a builder, what have you. And then from there, we get a copy of the client's credit report. We do a free upfront evaluation where we break down exactly what they can expect in going through our process. And then secondly, what we expect of them. And there are things that we're going to ask of them. Credit cards. Credit cards are the greatest utility in helping a consumer build their credit score. if you think about today's banking environment, banks don't lend money to people that need it, right? If you show you're desperate for cash on paper, you don't qualify, right? And so credit cards are really the only utility on your credit report that you can show that you have access to cash that you don't need. And so what we teach our customers about is, A, getting 3 credit cards, and then it's about not really using those credit cards, showing a $5 or $10 balance on a $500 or $1,000 limit, so you show that, again, you've got access to cash that you don't need.
And then how are you working with them from then on?
Yep. So our program's customized to their situation. Like you can't paint everybody with the same brush. So the evaluation really helps us to determine what course of action we're going to take, and then some of the things that they're going to do, such as establishing credit, restructuring their debt. They might have some collection accounts that are brand new that our program or process isn't going to impact. So it's about making sure that they can tackle those accounts. We'll help them negotiate, debt settlements and those types of things.
So you guys kind of quarterback everything
we do
on your end.
Yep.
So you mentioned the team, the number of employees that you've kind of grown to over the years. Talk to me about the growth cycle of the company from when you were started to where you're at now.
Yep. So again, there was just 2 of us in the beginning.
Yeah.
And there was 2 of us for probably about 4 years. And then in 2008, when the market crashed, then the need for our platform really increased, and so we grew pretty quickly during that time period. We actually opened an office in Spokane and had a sales team out of Spokane. We still have a few team members in our Spokane office. We opened an office in LA as well, and we had a small office there, and we still have 1 team member there as well. So
they're working remote in these different places, or
they are, yeah.
Okay,
exactly right.
Why Spokane?
Yeah, Spokane was a failed joint venture with another company, and I had ended up signing a 18-month lease, and it's your signature on it, right?
Yep.
I didn't want to go on my credit report, so we had to do something with the space, and we had 1,800 square feet, and so we ended up staffing a sales office and building it out there. It actually worked out being pretty good.
Okay, and then you've got the rest of the team now here locally.
Correct, yeah.
How's it been for you having the team in Vegas? You've been in Vegas now for a little bit. Ties to the city seem somewhat strong with it.
Yeah, we're building a bigger presence lately. Unfortunately, because we're nationally based and because we had some of our larger partnerships, are so spread out. Most of our business came from Texas for the last while, and so we're just starting to really try and hit Vegas and increase our presence here.
Oh wow! So even though being based here, the majority of the business has still been elsewhere.
Yeah, 40% of our business is from Texas. I'd say another 30% in Maryland, and probably about 30% now is in Vegas. But
wow.
Yeah, we have not had the presence in Vegas that I would have liked to have had to this point. We should be bigger here.
What do you credit that to?
Well, I think with a lot of these bigger partnerships, it's really where their demand is, and you end up trying to service them. And some of these partnerships are so large that bandwidth and what have you, you've just got to, from a time management standpoint, you've just got to,
focus on where the business is coming from.
Yeah, and not spread yourself too thin. And unfortunately, what we could do in Vegas with a lot of the first-time home buyers, I just came back from Phoenix this past weekend. They're opening a brand new community in the Phoenix area, and it's all about first-time home buyers. And so we did a credit seminar there for the last 2 days, and it was really focused on bringing first-time buyers to market. We could do that all day long here, and some of our builder partners that are here, we could have kind of a one-on-one face-to-face, where a lot of our other partnerships that are across the country don't have that access.
Yeah, that's almost kind of what jumped into my mind. I think when most people think of what happened throughout the housing market, and the places that always kind of come to mind are, I think, Vegas, Phoenix, are 2 of the ones that got hit extremely hard. Are 2 places that also have a very large influx of new people coming into them. So the opportunity for first-time home buyers seems to be extremely strong in those 2 areas. And then Texas makes sense, obviously, just from a sheer volume of the state, of how big it is, and how much construction's going on there. So I think the opportunity, obviously, you know this better than I do, I'm sure, because it's your business. The opportunity for growth in Las Vegas seems to be large for you guys.
Yeah, especially with what's going on, right? You take a look at all these communities, like Cadence out where by Lake Las Vegas, they're building 10,000 homes. In Lake Las Vegas, I think they're building another 6,000 homes. And so you have those types of projects going on, for sure, there's going to be some demand.
Yeah. Are you looking to go direct to consumer more with what you're doing, or are you still just kind of focused with the home builders primarily?
Yeah, no. So we are looking to go direct to consumer. One of my newer business partners, it was part of the Money Mutual Montel Williams platform, and he was on the direct response side. And so we are trying to go direct to consumer here in our next phase for sure.
Yeah.
Acquire our own customers.
Yeah, that could be. I mean, with kind of jumping back to what we were speaking about earlier with how murky the industry can be at times, if someone can kind of poke their head up above as the legit source within that space, it seems like there could be the huge opportunity there for you. I'm sure you guys have recognized that.
Yes, we've tried a couple of times because our product is priced where it is. We're not the cheapest, and typically when you're online, you're looking at the cheapest solution, and a lot of those solutions don't work or what have you. But we haven't been able to kind of overcome the hurdle, if you will, of we're higher priced, but this is what you're going to get from the platform.
Yeah, this is the best of breed, and it's actually going to do what we say it's going to do.
Exactly.
All right, we'll be back after these messages with Mr. Todd Archambault of eCreditAdvisor. Welcome back to Las Vegas Money Resource. I'm your host, Travis Scribner with Westpac Wealth Partners. Questions around finance, questions around wealth management, questions around retirement planning, don't hesitate to give us a call. You can reach my office at 702-978-6910. That's 702-978-6910. Enough about me. We're here with Todd Archambault of eCreditAdvisor. I'm like really fascinated by your business model and how it got started. And I think just from being in the finance industry for so long, over a decade myself now, and seeing the other companies, it's really, for lack of a better term, it's just really cool to see someone doing it the way that you guys are doing it and seeing it being done legitimately. I think back to earlier in my career, some of the things that we did and referring, or not necessarily even referring, we would look for reputable credit repair companies for our clients. And they were terrible, man. Every single one of them was like really bad, or they were really hokey. And so to see someone in the space doing it this way, it's just really cool to see. And I think there's just such a huge need for it in this city. The title of the show obviously is Las Vegas Money Resource. We've got deep ties to the city. I'm very committed to seeing this city become everything I think that it can be. And so someone doing what you're doing, I think, is a huge, huge resource. I think especially when you guys figure out that direct-to-consumer component, it's going to be lights out, man, because there's just nobody doing it like you guys are doing it, from what it sounds like.
Hopefully we do figure out that piece. But yeah, with regards to how we do and what we do, honestly, I think we are unmatched. There's not a company that does the diligence and takes the time and with the employee dedication with regards to the one-on-one credit coaching that we do. The raising someone's credit score 75 points in 112 days, you're bringing them from completely off the grid to market.
Yeah, I mean, that's like the perfect way to say it. I mean, 75 points is a quantum leap of a jump. I mean, you said it. I mean, you're going from either, like, if you're middle of the pack credit, you get a 75-point increase. I mean, you're an A-rated borrower at that point.
Exactly.
And if you're off the grid, 75 points is getting you.
Yeah. Yeah. A lot of our customers come in the 540, 550 range, and so that 70, 75 points puts them in a position where they're now 620. Now they do qualify for the FHA. And then the other thing that we focus on is not only about what we've done for them historically with regards to cleaning up some of those items, but also putting them in a position so they now do have control. You know, from a buying experience, a lot of these customers are now facing credit challenges for the first time, and they don't have access to the market. They don't know where to go, and they don't have control of their credit profile anymore because no one will give them access, right? If you can't qualify for credit, you can't build your credit, right? Yeah. And so our program focuses on the second piece, which is, okay, now that we've helped you get to market, let's help you to continue to build and increase your credit profile long term. And so that client that graduates from our program 12 months later, maybe you graduated with a 620, but now you're a 680 because we've taught you how to build and leverage your credit profile long term. And there is a bit of a game to it. There is a bit of a science to it. You have to have credit to be able to build credit. Mm-hmm. And it is about the illusion of on paper having access to cash that you don't need. And there's two types of credit. There's revolving and installment credit. Buying a home, buying a car typically doesn't help your credit that much. Most people think that those are the real vehicles to building your credit. It's not. It's credit cards.
So how many credit cards should somebody have?
Yeah, at least three. And then, what we tell our customers is as they go on in their regular life, and as they shop at, maybe Home Depot or what have you, get a credit card from them. But again, don't carry a high balance. Don't max it out. Don't use it as, your source of buying power. You use it so that you have leverage in the credit market.
So you're now displaying to the creditors or to the credit companies that, hey, I am a responsible credit user. I've got access to this money, but I'm not using it.
Yeah. Yeah, and so you look at a credit report. They unfortunately they don't have the ability to view your checking or savings account, so they really don't have an idea what your discretionary spending is, and so they're using credit cards to try and get that view. And so what the bureaus are trying to do now is they're trying to change from a credit reporting standpoint how you are as a credit card user. Are you someone that pays minimum monthly payments, or are you someone that pays in full each month? A very different user in terms of discretionary income and buying power.
So by seeing that, they're now kind of able to gauge most likely what your cash flow situation looks like as well. So if you're paying just minimums every month, it's like, okay, well, this person may be a little strapped versus they're stroking, $2,000, $3,000, $4,000, $5,000, whatever it may be, to pay these credit cards down in lump sums.
Yep. Yeah, and a couple things. So you've got two types of credit. You got installment and revolving credit. Installment credit is again, the auto loan, let's say. And so the day you buy an auto, let's say you buy a $25,000 vehicle, most people will put $5,000 down, finance $20,000 of it. You pull your credit next month, you're going to drop your credit score 40 to 80 points. Why? Brand new line of credit, completely maxed out, no payment history attached. 12 months later, you've paid this down for 12 payments. You might be at 80%. So it's going to start helping to build your credit profile. 60 months down the road, you're going to pay off this auto loan. You're again going to drop your credit score because these 60 positive payments are no longer going to be on an active account. And that theoretical ability to borrow $20,000 no longer exists because you've closed that account. And so credit cards, as long as you use them once a year and have them in good standing, they stay open and active. And a zero balance is the exact same as a payment made. So you can have a credit card that you've used 10 times over the last 10 years, and it's going to show as 120 positive payments.
Wow. So you should never be closing these old credit cards out. Just maybe cut them up or whatever it may be, but at least keep them so you have that.
Never close a credit card.
You have that long credit history with it.
Exactly right.
Okay, that makes perfect sense. I'm a consumer right now. I want to get a hold of eCreditAdvisor. I want to begin working with you guys. What would I do?
Yeah. So first thing you do, email address is Todd at eCreditAdvisor.
I'm glad you went with Todd at eCreditAdvisor, not your last name.
Well, it was a take on, Bill at Microsoft.com.
Oh, fair enough. So Todd at eCreditAdvisor.com. Hyphen between that, or is it just eCredit?
No, all one word.
So Todd at eCreditAdvisor.com. Then what would I do?
And then my direct number is 512-900-4911.
So they should just email you and say, Todd, man, I need help.
Yep, I'll take every call.
That's awesome.
Yeah.
So you've got staff here locally as well. You mentioned how many staff members?
Yeah, 17.
17 staff members. And so each person, as they come on board, is assigned.
So we kind of have a team structure where I've got a closer and I've got a credit coach kind of assigned to my team, and then we have kind of a pod structure where each account exec has a closer and a credit coach assigned to them.
Awesome. So if they're calling, they're actually going to get a hold of somebody.
Yeah, absolutely.
Because there's multiple people on the team that may be assigned to that individual.
Yep.
And I think that's a different touch, man. I think the fact that people can actually get a hold of somebody, people can actually talk to somebody about their situation, because we said it before, it's life-changing if you can increase somebody's credit score by that kind of volume. I mean, you've changed all aspects of their life from a purchasing power standpoint, whether it's getting a job or getting into a new apartment or a new car, or whatever it may be. And that's the real deal.
Yep. Yeah. Insurance scores. We have a partnership with American Family Insurance. Same thing.
Yeah.
40% of your insurance premiums credit score driven.
Wow. Todd, I want to thank you for being here with us today. Again, if you're at home, you're listening, you've got questions on credit, you want to repair credit, Todd at eCreditAdvisor.com, I believe, is the email address. That's
yep.
Todd, Todd, at eCreditAdvisor.com. And the phone number was?
512-900-4911.
One more time.
512-900-4911.
So that's Todd with eCreditAdvisor. Thank you so much for being with us on Las Vegas Money Resource. Thank you at home for listening. Have a great Thanksgiving, and we will speak to you all next week.